All right, everybody, welcome back to the Matt Money Portfolio. I'm your host, Matt Money, Matt Moolah, whatever you want to call me. I'm your boy here talking about the recent purchases that I've made, I guess you could say, since the end of February. So we'll see some positives, we'll see some negatives, but overall, just want to show you guys what I've been doing over the past month and a half to 2 months. And has it worked out for me? And quick answer, we'll give you a quick positive. I think it's doing relatively well. Portfolio is back on top with respect to being at all-time highs from basically where we were in the past. So before all this sort of shenanigans happened, we were sitting around 418 or so $1,000, and some of that wasn't all stock, so some of that was cash as well. So it might be a little bit confusing because I'll show you something later, which you'll probably be like, well, 418,000 plus X doesn't equal 442,000. I understand that. So there was a lot of movement of cash to and from, and now I'm sitting on a lot less cash than I was then. So just bear in mind that when I show you the things later, it's strictly the things that I have bought. So anyway, let's just hop right into this. Currently sitting around $442,000 in the portfolio, 140 or so thousand coming from the 401k, which unfortunately I can't split out all too much. Most of it is sitting in the S&P 500, and then the remainder is sitting in cash. So I think that that's sitting at about 50-50. I think that's 70,000 S&P, 70,000 cash right now, because I didn't end up getting it all invested in this most recent downturn. So I need to be more diligent about that because I have lost some opportunity cost of investing at the lower price. But going back to the rest of the portfolio, you can see in this table here to the left, everything that I'm invested in. We can go into the right hand side in just a moment here, which shows you the pie graphs, which are a little bit easier to read. But very quickly, the income generated from this portfolio is around $14,750, or just over $1,200 a month. So that's pretty cool. And then if you actually look at the yield on cost and the dividend yield, we're sitting just below 5%. So it is somewhat high compared to normal portfolios, and I'm aware of that. I am trying to get it back down, but there was some good opportunities to purchase some stocks above the 5-6% yield, as their yields basically have gone up because the prices have gone down. So anyway, going back into the actual allocations. On the right hand side, you're going to see allocation by sector, and on the left hand side, you're going to see income by sector. So depending on what you're curious about, just quickly, we're going to show that the largest amount in the portfolio is financials, energy, real estate. You can see that this financials really blew up. It was at about 15% not too long ago, but obviously we've had some run-ups in the banks, and so this is obviously blowing up pretty big right now, getting me some gains in the portfolio, which is nice because I think there are some losses still in the total financials aspect of the portfolio. And then the rest is mostly followed by industrials, healthcare, consumer staples, and then the remainder is split up against telecommunications, materials, information technology, and ETFs, as well as cash. So contrary to what we were seeing in the allocations sector or side of things, the income is actually coming about 25% from energy stocks. So that's not surprising, right? Because energy stocks, generally speaking, are yielding way more right now than financial stocks. So think of your Shells, your BPs, your Exxons. They've kind of climbed up to the 8 to 12% range, which in my opinion is somewhat unsustainable. But I believe that those are going to come down as price rebounds and oil rebounds quite a bit, like it already has since the March timeframe. So financials is about a fifth of the income coming from the portfolio. Real estate's about 16.6%, and I'm actually going to continue to drive this up because there are some other factors. There's the REIT aspect of things, and there's also the cardone capital side of things and the fundrise side of things as well. So we'll touch on that in future videos as we kind of diverge a little bit away from the stock market for the REIT aspect of things, or the real estate investment aspect of things rather. And then the remaining, I guess, third of the pie is in between, say, consumer staples, healthcare, industrials, telecom, and whatnot. So cash, obviously, there's a large amount of cash in here, about 5% of the portfolio, but due to the recent drop in interest rates, obviously, we're not getting all too much from the cash income from cash because the interest rates, right? So yeah, let's just do a quick word from our video sponsor, and then we will hop over to the actual recent purchases, which is the main reason for this video. So as you guys know, me and Kyle, the gentleman on the left on this picture, started Passive Income Educators. It's a website for you guys to come and talk to us one-on-one, or to do some minor things like finding out how to read balance sheets and trade options relatively quickly. So some of these classes are 30 minutes long, some of them are an hour and a half long. So sometimes it's strictly Kyle, sometimes it's a combination of both of us, and sometimes it's just me. So there are some blog posts as well on here if you guys are interested in reading about those classes before you actually say purchase them and find out a little bit more about them. And with that, of course, we also started a secondary YouTube channel. So we do a lot of live streaming between me and Kyle, and we've actually got to a point where every single Friday night we will be live streaming at about 10 p.m. Eastern time. And so what we decided to do is, some people are really, I guess, polarized with the live streaming aspect of things. So some people actually really enjoy live streams and they love to ask questions. They love to be part of the other people that are there asking questions and hearing about different things of knowledge that are kind of off the cuff. And other people really just want to see really tight buttoned up videos. And so we separated our two channels here. So obviously you're watching this on Matt Money. This is the Passive Income Educator channel where we would do a lot of our live streams. You can already see it's very different. It's mostly my face. So which could be good or bad depending on how you look at that. But that being said, it's very different content. We hope that you guys would join us over there. So there'll be a link in the description below if you guys are interested. We're already at 188 subscribers, so appreciate those guys that have already gone over and checked it out. But we do want to make sure that we get to about 1,000 so Kyle and I can start getting monetized, and also add a little bit more, I guess, oomph into the channel. So as soon as we start pumping out some cash into it, we can put a little bit more oomph into the channel, get some more people on, do a little bit more effort with it, right? So thank you, and the link to come join us over there will be in the right hand side. And also I do some impromptu Q&As every once in a while. I've done 2 in the past week. So one I did last Saturday, and one I did like 2 days ago on Monday night, or was that Tuesday night? I think it was Monday night. So you could see, yeah, a day ago we're able to do it, and so far so good. Had like 20-25 people on, and literally just talked about questions. I didn't have any agenda. I literally was just like answering questions from the audience. Some of them were really in-depth questions about oil and gas, and some of them were strictly just like, how do you evaluate a stock, or should I buy Microsoft? And I would give not only just like, hey, yes, no, but why I personally am not buying Microsoft right now. So thank you for that aspect of things. Let's jump into the real reason why you're probably here, which is the recent purchases. So I don't want to dive too much into this. Don't really consider this $78,000 number because it's not fresh capital, right? Unfortunately, I didn't really think of a way to figure out what was actually coming out of, let's say, like a cash account or like a personal savings account, because by the time I started investing, I did have a good chunk of change, because I was thinking about buying physical real estate earlier this year, just like every beginning of every year. And then we had a minor dip in the market. And so a lot of this money came from cash that was already in here in the portfolio. So part of that $400,000 portfolio already. So I didn't just like come out of my pockets out of nowhere, strictly from my strictly from my paycheck, and immediately just start throwing money in. I mean, I did some of that as well, so don't get me wrong, but some of this money was already on the side. So it's not like net new capital, right? So if you were to say like, okay, well, you had 418,000 before the crash, why don't you have 490,000 now? I can understand the confusion. So there was about 30 to 35,000 in cash that I've kind of used from the sidelines before then, and you can check some of those videos beforehand, and that has now been invested. So I didn't really know a way to really keep track of that, but what I did do is keep track of the stocks that I did invest in and the prices. And just to want to do a quick overview of the stocks that I did invest in. So a lot of them are higher yield. So a lot of them are kind of like depressed bank stocks, energy stocks, real estate stocks as well. So I did take an advantage of investing in a lot of those companies. And you can see majority of the capital that I've put in is into financials, whether it was Wells Fargo, JP Morgan, Bank of Nova Scotia. I did add a little bit to energy as well. And you can see it's changing because the price is changing, which is kind of cool. Just went from 13.9 to 14% in energy. So the capital here, um, is at the moment based off of the current prices, 14% for energy, very small amount in consumer staples, very small amount in consumer discretionary. There was a decent chunk in industrials, stuff like Caterpillar, Boeing, and then there was a decent amount in real estate as well. So Stag Industrial was one that stood out. O Realty Income Corp is one that stood out. But financials, I think, is the biggest. So Wells Fargo, Bryn Mawr Bank Trust, JP Morgan. I did invest a lot into US Bank, but I did sell out of that US Bank position, which we'll talk about, and took that money and put it into Bank of Nova Scotia or JP Morgan. And we'll talk a little bit more about that if I remember. But the income coming from that, so about a third of that is coming from financials, so about a fifth of that is coming from energy. Real estate is about the same at about an eighth of the portfolio. Industrials is nice. The Caterpillar investment looks pretty nice. The Boeing aspect of things, not paying a dividend, right? So all this money is now having to come from Caterpillar and maybe some other industrials that I put money into. And I did do a small BHP investment as well. So um, hopefully that's kind of cool. But like I said, this isn't going to be like a total $4,000 ad, right? So it was a decent add to the portfolio. I mean, I was looking at like 12 to 13,000 before February kind of hit. But obviously you're looking at 12 to 14 or 12 to 13,000, add 4,000. You're like, well, Matt, why aren't you getting 16 to $17,000 a year in dividends now? And it's because I was taking away a little bit from those banks, right? So I was taking a little bit, sorry, not the banks, but my savings accounts. And so I do get a little bit of money on that savings account. And so the money that I did invest gets me 4,000, but that's partially offset by the savings interest that I get from, it was like at 1.5, 1.7% by the time I was starting to invest this. So doesn't make entirely 100% sense, right? So unfortunately, it's kind of like a half of an equation. But at the same time, it's really cool to be able to look at all the individual purchases that I've made over the past month and a half, 2 months, and really see how well they're doing. And so first we'll get into the bad parts, right? So what wasn't good, right? So I'm still down a lot of these very first few tranches that I made in like the early March, late February timeframe. So I did buy some Shell, 56 shares of Shell, 21 shares of US Bank, which I've now closed out. So that was a 33% loss. And we'll talk a little bit more about that before we start wincing so badly. Wells Fargo bought 45 shares of that, bought 100 shares of BP, which is currently almost even. Bryn Mawr Trust, I bought 50 shares. Caterpillar, I bought a decent amount at 106, which was a good buy. I wish I had bought more. 3M, bought 6 shares, and I actually believe, no, I still have these. Or did I sell these? I think, no, I still have these. Yes. Yes, I still have those. LYB, I bought 15 shares of that on the way down. Exxon, I bought about 94 shares of that. So we're down about 12% on that. So that's going to be a nice long-term hold. I actually initiated the trade at $49, and the next day it jumped up a couple, like 5% or something like that. So unfortunately, I almost got it down to the $49 range, but I did not. So it is what it is. The first tranche of Boeing here is at about 162. So we do eventually get that Boeing share position down to 132, I believe. So we'll see that in a good bit. We do have some Stag Industrial in here, which I bought for $21.50. So that's up about 27%. That was 23 shares. We did buy more GEO. Okay, I didn't realize that. Okay. I thought we did not have more GEO, but I guess we did, and that's maybe more so why the share price is what it is, or my break even is almost what it is. I thought I had a little bit more in here. But bought 40 shares of GEO, so up 11% on that. Bought 37 shares of Bank of Nova Scotia here, just a little bit over break even on that. Bought some more Caterpillar at 93. Wow, I wish I bought more. Crap. Okay, 16 shares of that, so up $470 on that one. Kinder Morgan, which I actually sold out of at about this price, so it's not like it's too skewed. So, but I got to go back and make sure I put some hard coding into this. But I did sell out of this. I mean, it's basically break even. It was one share, right? So doesn't really take too much impact into the portfolio. Did buy some GM, bought 6 shares of GM, and I continue to buy GM as I see fit. I think it's going to be a good long-term player and everything. Do have some Southern Company. We have some more Boeing, about 7.5 shares of Boeing here. Up about 10%, so this is about 135. So this is the second tranche that I had bought for Boeing. Some more Southern Company, some more Visa, some more BlackRock at 365, and I'm kicking myself because I really wanted to buy more of this. But I'm up 47% on BlackRock. I knew it was something I wanted to buy. I thought it would be like the banks. I thought it would be like holding for quite some time down lower, but it made a huge V shape, and now I think it's probably close to all-time highs. And I'm pretty upset with this one, to be honest with you. But I mean, I'm happy that I purchased it, but wish I had bought 3 or 4 more shares to get it to a pretty sizable position. But it is what it is. And then you have the third, and I believe last tranche in Boeing, or I could be wrong. There might be another one, so we'll hold off on that. But 10 shares at $106 a share, up 40% on that to date. We do have some more RDSB, so 50 more shares of Shell here for up about 25%, $300. We do have 2 really good positions here in Realty Income Corp. So bought a 50-share tranche at 47. Later that day, it dipped down to 41. So did buy another 50 shares rather at $41, which is nice because if you combine and average these two, it's what, like 44.25 for an average, which is pretty good. Can't complain with that. Between the two, we're up over 1,000, over 1,100 just on this alone. But I'm going to continue to buy this one if it's below the $55 range, and I'll probably continue to buy it maybe up to the $60 range personally. I do want to get this position up to over 800 shares, and it's currently sitting at about 150 shares at the moment. Maybe it's 200 shares at the moment. So more to come on Realty Income Corp. I did follow my buddy Stevie into Cosmos Energy. So I had bought Cosmos at the $5 range because it's a higher risk oil and gas exploration company. And so they look into new access into new regions. So they're really focusing on West Africa, Northeast, South America right now. And so I think that they're a high risk, high reward sort of company. They actually went from about $5 to $6 down to 50, 60 cents. And I invested them in about 81 cents. So currently sitting on about $500 increase on this one. Shout out to my boy Stevie. It's probably one that I wouldn't have thought about buying back into and buying at a lower price. But this is really helping lower my cost basis down to about the 2 to 250 range. So we're relatively close on the entire position, and I'd rather have 1,000 shares at 250 than 500 shares at the $5, $5.50 range. So still going to hold this one long term. I think that it either could get bought out by a bigger company if they find the right thing. But lo and behold, who knows what is to come. IJR actually sold this one as well. So a couple bucks that would be kind of taken off this because I sold it about 2 days ago. And that reminds me I needed to add. So I sold it and immediately put it back into ITOT. So this number here, the $75, is probably still valid because they're probably about equivalent. So it's probably just off by just a little bit. I took all the money in my YouTube Moolah account and IJR and another ETF and just said, you know what, I'm just going to do ITOT, which is the total stock market. So it doesn't, I guess, prefer, say, large caps or small caps or anything like that. It's just set up as a total stock market fund. So it is wherever it is, and it invests in a couple thousand different companies. So this is one of the better trades that I've made. Visa, about 20 shares at 136 bucks. So I was pleasantly surprised to wake up like yesterday morning and actually see this. But I am upset that I didn't buy more for sure. I was like, you know what? I'll probably buy 20 shares here, 20 shares if it continues to go down, and then it never went down. It immediately went back up to the 140, 150 range, and I was like, okay, well, if it goes back to the 140, and I don't think it ever did. So unfortunately, this is one that I wish I continued to add in. I have about 40 shares in total of Visa. Not at the 136 cost basis though. I think in my M1 Finance, it's about 170 or $180 a share. So still not the best, but it is back in the green compared to where it was. Carnival Cruise and Royal Caribbean, we already sold these bad boys for a profit. I saw 30% and 40% respectively, and I said, you know what, I'm done. Right, like I'm just gonna take my money, run away with it. Wells Fargo bought another 6 shares or so. I think this was to get it to like 400 shares or something stupid. Maybe it's 300 shares or something stupid. And still slightly down on this bad boy. Did buy BHP at just under 30 bucks, up about 50 bucks on that. Long-term dividend player, if you're into material stocks. And this one is not hurting at all. I mean, yes, they have some exposure to oil and gas, but I'm assuming copper prices and iron prices are still going to be okay once the economy still opens up a little bit. Then going back to the Visa, back in M1 Finance, what I was kind of talking about, I was trying to cost average down in the 156 range. So I will every 15 days or so on the 1st and the 15th of every month, trying to invest money into Visa to kind of get my cost basis down in that. So did buy another 9 shares of GM, up about 40%, 70 bucks, but I'm holding that for the long-term dividend. So I know that they're kind of suspending dividends right now, but I think in the future they'll be back and perfectly fine. Southern Company, up about 6% on 2 shares, so nothing too crazy there. I bought another 50 shares of AT&T, and this is up about 8.5%, so 120 or so bucks. Looking forward to that dividend kind of coming through. Bought another 60 shares of Wells Fargo at 27, up about 3.5% on that. Bought a bunch of shares of Bryn Mawr Trust, 50 shares at 16.5%, up right now. This is when I was really starting to load into JP Morgan, so I bought 20 shares initially at 88, another 10 shares or so at 91, another 10 shares at 95. So I started at 95, and when it was going down, I cost averaged. So you can see over the next like 2 or 3 days, I was really doing it. So the 14th, I was buying a 95. Next day, 91. Next day, 88. So pretty excited about that one. Got it in at a pretty good price. I think it was like 89 after everything was all said and done. Because I do have some more purchases for JP Morgan a little bit later in, I think, early May. So we'll see that just a moment. Purchased Visa here in my normal M1 Finance account, or was this individual brokerage account? I think this is misnamed here, M1 Finance, because no way would I only buy like a share and a half of Visa in my individual brokerage account. Just wouldn't make sense. So bought it in my M1 Finance account here, 1.5 shares, so nothing too crazy, up 20% on that individual purchase. Southern Company down a little bit on this particular purchase. Finally caved in about Amazon. It was in my YouTube Moolah account. I had some excess money. I had like 500 bucks come in from YouTube last month. It's my best month ever from YouTube specifically. I put out a lot of content in like April, May timeframe, early May timeframe, and I was just rewarded by just having so many videos coming out. I had some pretty good videos about oil, some pretty good videos about Cardone Capital, and thankfully those kind of paid me a couple $100 more than I was used to. So don't expect that anymore. Probably lose about 60% of that going back in to the May payments, but on track to make about 250 this month. So still can't complain, but love providing you guys the videos, so that's why I do it. But I'm going to hold this one forever, so I don't plan on ever selling this Amazon share. Maybe I'll buy more if it dips down and I have the money in my YouTube Moolah account. Maybe I'll sell some of the ITOT to buy Amazon, but I think with my YouTube money now, I'll just keep this 1 share of Amazon and just keep piling it into ITOT. You have Altair Group, which I bought 30 shares of when it hit 40 bucks, so I thought that was a good price. Bought another 25 shares of Wells Fargo, bought some more USB at the same time. I did eventually sell that USB at $30.75, so I did sell it at a loss. Took that money. Oh no, this is not that. Not yet. Uh, did at the same time buy 10 shares of JP Morgan at $89. So continuing to lower that cost basis. Got some more Wells Fargo, 100 shares at 25 bucks. So really just was trying to get that cost basis to below $40 a share overall for Wells Fargo, I think at that point. Boeing, I added another 13 shares at 126 bucks. So that really is what got me down to the 132-ish cost basis for all my 40 odd shares of Boeing. And then continued to buy some Altria Group at 37. So I bought another 27 or 25 shares of that. Caterpillar added another 7 to get me to 40 something shares of Caterpillar. Or is it 75 shares? 75 shares of Caterpillar now, which I'm pretty excited about. And I don't remember what my like the total cost basis is for my Caterpillar shares, but it's pretty good. I think it's in like the 100 to 110 range. So overall, I'm up probably about 13 to 20% on that Caterpillar position overall. So can't complain with that. Did buy some more AT&T at the $29 range, so I bought 25 shares there. And did buy 35 more shares of Realty Income at 51. So not obviously the best price that I bought, but I still want to continue to load up on those shares. And so I think that put me up close to 200 shares in total for Altria Group. And then this is when I sold USB and took this money and bought into JP Morgan. So I said, you know what? I was like, I'm going to get out of US Bank. I was like, there's no reason for me to be in US Bank. I love JP Morgan right now. I think they're the highest quality bank, lowest risk at the moment. I said, you know, I was like, if I'm going to recover in any of these stocks, I'd rather recover in JP Morgan than US Bank. And so I was really loading the truck on USB once it already started declining. So it was at a max of like 60, 65 bucks. I started buying at 55. And so I did take a big loss on some of those tranches, but I was kind of cost averaging down throughout US Bank. And I was just looking at it. I was like, well, JP Morgan was just at 140. I was like, if they're going to recover back to the all-time highs, I was like, I'm down 30% overall in my US Bank, or it was like 25 or 30%. I was like, if I'm going to go back up 30%, I'd rather be with JP Morgan, which is more likely to make out of some sort of recession or impact than, say, a US Bank, right? So much rather be in with JP Morgan than US Bank if we're looking on the full-time long-term upswing. So and the dividend was really good for JP Morgan as well. So I couldn't complain about that. I did take a little bit of a haircut in terms of income, but like I said, risk versus reward for being in US Bank versus JP Morgan, no brainer. I had to go with JP Morgan. US Bank was trading at a lower book value, but I mean, I was fine with going with JP Morgan. That also said, I did buy another 100 shares of Wells Fargo at $25. So probably still down overall on Wells Fargo, just based off the fact that I've had shares since 2014, 2015 timeframe. I've been continuing to add, but overall, it is what it is. Bought another 13 shares. Did I already go through that? Sorry, I just skipped back up. Yes, I did. Okay. Rewind. JP Morgan, 35 shares, $85 cost basis. Just went through that story. Good. Started buying IBB to get a little bit more of ETF exposure, healthcare exposure. Now no longer doing IBB, but it's currently sitting on the books just based on the fact that it's waiting to be sold. And I switched to ITOT from IBB, complete 180, total stock market fund versus healthcare. But I was just looking at IBB and I was just like, what am I doing with this? I was like, maybe I should lower the allocation in M1 Finance. And I was like, why is it even in here? So glad I did some reflection. Still going to hold QQQ though. QQQ is one that I've been kind of looking at. Had a good conversation with someone about XLK as well. So XLK looks good as well. It's a technology ETF as well. But XLK seems like it's more focused towards semiconductors, which isn't a bad thing, but you don't get that exposure to, say, the top technology companies like the Microsofts, Apples, Facebooks of the world, if you're investing in XLK, or if you do, it's not in their top 10. So the top 10 was a lot of semiconductors. So I said, you know what, I'd rather have QQQ and see where some of these top technology companies go, like the Facebooks and the Teslas of the world. So um, JP Morgan did buy another 15 shares at 86 cost basis, and I did end up buying about 85 shares of Bank of Nova Scotia as well. So that ended up being a good one. Did buy a spec play here in MindMed. So my buddy Kyle from Passive Income Investor is all about this one right now. So it is a very small portion of the portfolio though. So it's way less than 1% of my portfolio. So keep that in mind. So if you're saying high risk, high reward, let me put 50% of what I have into it. Do not do it. I think that that's what a lot of people always end up doing. Allocate your risk. If you do put a lot more than say 5% of your money into something like MindMed, just make sure that there are risks involved and you are trying to manage those risks to make sure that you do well in the future. So that's all I will say about that. Did buy some more Southern Company, some small amount in Southern Company, and I did buy an additional, I guess, speculative play here in MoneyGram. So I might make a separate video about this, but MoneyGram is a person-to-person sort of payment provider, but they do it via like paper transactions, right? So if you wanted to use MoneyGram, you'd go to the grocery store. They might have a MoneyGram there. You say, hey, I want to send it to Nigeria or Mexico or something like that, and they would be able to coordinate that phone call and give that person that money. But the problem with this MoneyGram is when you're dealing with paper currencies, you have to deal with the foreign exchange of, say, buying let's just say Mexican pesos versus buying US dollars. And so there is a little bit of money lost for, say, MoneyGram when they're making that transaction. Now, of course, some of that money is being passed on to, say, the customer. But that being said, they are now looking at alternative ways of, say, dealing with this, such as being able to buy Ripple and then immediately, say, buy USD to Ripple and then Ripple immediately to, let's say, the Australian dollar. And the commission costs, obviously, to buy into Ripple and convert to Australian dollar is instantaneous, and it allows you to remove that sort of spread in the bid-ask price for, let's just say, foreign exchange, and removes a lot of the big banks, and requires a lot less cash to be lying around for like working capital. And so it makes things a little bit easier and faster as well. And so curious to see how this works. They actually just signed a partnership with Uber as well to do that, because Uber is big in Europe and it is big in Australia as well, and Canada, I think. So instead of being paid in, say, US dollars, then having to go from US dollars to Australian dollars and having to deal with that Forex aspect of things, they'll buy US dollars to Ripple, Ripple to immediately Australian dollars within seconds. And because everything is what it is, you don't lose that sort of like spread between, let's just say, the normal Forex exchange that you would do. So curious to see how this happens and works. Increasingly excited to see the benefits of this Uber sort of partnership. And I'll probably make a separate video about that. Did buy 20 more shares of Realty Income Corp at $52, so it wasn't a good price. Now I think I have about 200 shares of Realty Income across all those, and so far it looks pretty good. QQQ, again, just not too long ago, about a week or so ago, and IBB again, but IBB will be sold tomorrow to switch into ITOT. So more to come on that. So overall, we're looking like we are up about 10% or about $7 grand, which doesn't seem like a lot, but keep in mind the market is not fully recovered yet. So as we go into the future, we'll be looking at, say, 20-30% on some of these positions overall. And as some of these, let's say, other companies kind of come back to life, like the energy sector is still way down in comparison to the rest of the economy. So as things kind of begin to normalize, hopefully we will begin to see this go into the 20-30% return within a relative quick amount of time. So so far, so good. curious now what the forecasted dividends kind of look like for this particular position here. So you can't really pay attention to the 2019 income, so I might as well just erase it really quick, just because it doesn't really make sense here. But what we can look for, and let me do the same for 2020 because it has some old payments in here. But this specifically, this 2021 aspect of things is what you could expect from the purchases that I have made. So the increase that I would expect to get on a month-to-month basis. So for example, in January 2021, based off these purchases that I made of the last $70,000, you can expect the income for January to go up by about 300. And about March timeframe, you can expect it to be about 550 to close to 600, based on if any further companies say cut the dividend or anything like that, which is finger crossed they do not. And so, yeah, that's kind of what it looks like here. Um, might have had some mistakes in here, but overall, it should be okay. I know there's probably one mistake in here, so let me just double check it. Nope, I didn't make a mistake. So sometimes you have to look and find out how many payouts a year a certain company has, and I thought I would have screwed that up for BHP, but I did not. So, yeah, if you kind of average all that out, you could probably expect an additional $200 or $300 a month in overall income. So this is saying about $335, but I'm sure some of these will cut the dividend, which is fine with me. If they do, I'll probably continue to purchase the shares, depending on what kind of company it is and how drastic their balance sheet is, but how drastically bad their balance sheet is. But keep in mind that this isn't all net positive. So 335, yes, but some of that was from basically taking from income from the savings account already. So I do remember those. I think that account was making about over $1,000 to $1,500 or so in income, because it was at about a 1.5% APR for interest, and I did have 10 or 20, $30,000 sitting in cash in there at one point. So very easily that could have been close to a couple hundred to $1,000, just specifically in that interest account alone. But keep in mind that before the February timeframe, actually, we were getting closer to the 2% ish interest rate payments. So I might be missing some things up there, in terms of how much was in the personal savings account versus what we have invested here. But what I do know is these investments are real, so I might have missed one or two of the individual purchases. That's fine, but like I mentioned, it's not a one for one, right? So the 78,000 can't just be added on to the 418,000 that I was expecting right before the crash on February 19th, because some of this did come from different sources as well, right? And so if you also take away the $9,000 in gains, that probably would get you closer to the 470 range. So, like I said, probably had about 20 to 30, maybe even more $1,000 in cash. So that's probably where you're seeing that difference of about 30,000 in the account, from 418 to 440ish in the account. So hopefully that makes a little bit of sense. Understandable if you're a little bit confused, but like I said, more than happy to answer any questions you guys have. If you were to say go to our live stream, I'll be doing Q&As all the time. Maybe depending on how I feel, I'll do one right now. And hopefully you guys will join me on Friday nights when we do our normal live streams right after Independent Investor does his 9 p.m. live stream. So thanks, guys. That was a single take. Hopefully I didn't mess up too bad for you guys. I'll listen back and maybe make some small edits. But once again, always appreciate your guys' support, and I'll talk to you guys on the next video. Cheers.